the boomers are coming, the boomers are coming. Vanguard's idiotic decision to not allow their own customers to buy the ETF, even though they're allowed to buy the futures ETF and MicroStrategy and the miners. I mean, mind blows at the idiocy of that. Bitcoin proxy, they've never said a word. This is 100% political. This is 100% negotiated. Okay, you firms, because Merrill's in here too, Bank of America, they are all in cahoots. And look, they can keep trying to stop this from happening, but it's gonna happen. They think this is on brand. They're going to lose an entire generation of investors. So all the money that built Vanguard is gonna leave.
Don't forget to subscribe, crypto traders. Let's continue with the interview and the analysis of this one.
We never asked for your endorsement nor your approval. The CEO of Bitcoin didn't show up to, sign in. And I mean, the arrogance of that statement, the idiocy of that statement. Did the SEC chairman put out a statement of any kind? Forget one as pointed and baseless and ridiculous as the one he put out on the Bitcoin ETP. Did he ever put out any warning on the cannabis ETFs before they lost 80, 90+% of their money? Did he ever once make any comment of any kind, anywhere, on the triple inverse levered ETNs and ETPs that have lost 99.99999%? I mean, they literally lose money every single day. There's no way they could ever make money. One comment of any kind, a tweet, a comment to his wife. I mean, not one comment. And yet, how many hundreds, literally hundreds of comments did the guy make on this? Saying things that are untrue is bad policy, right? Saying that the SEC got it wrong on the law is incorrect. The law is very clear that they got it right on the law, that they could not obfuscate without cause and be prejudiced against a person trying to create a product for the public. So the law is very clear. And look, I'm not a lawyer, but the law was decided, and there is case law and precedent that says the SEC had to do this if they didn't have a good reason not to. So she's wrong on that. And saying they were wrong on policy, it's not a policy-making entity. You're a policy-making entity, okay? You're part of one. It's not you alone, but the SEC doesn't make policy.
In a recent statement, Mark clarified that at no point did they seek endorsement or approval from the chairman of the Securities and Exchange Commission. This declaration underscores a commitment to independent decision-making and a proactive stance on regulatory matters. One of the main questions revolves around the SEC chairman's lack of official statements or warnings on alternative investment products. Specifically, the lack of attention to other financial instruments such as cannabis exchange-traded funds and leveraged exchange-traded products bonds is noted. This raises a valid and thought-provoking question about the consistency of regulatory communication across different investment avenues. By highlighting the apparent neglect to address the potential risks associated with other investment vehicles, it prompts a wider debate on the regulatory landscape. This not only points to the need for a consistent and comprehensive approach to investor protection, but also urges regulators to consider a more inclusive and equitable dissemination of information. These observations draw attention to the importance of a level playing field in financial markets, where all investment products are subject to transparent and uniform regulatory scrutiny.
What bothers me, right, because I am a boomer, I am one of the gerontocracy, that this is what this is, right? This is gerontocracy gone bad, right? I it's hard for me to say these words out loud, but as you age, your brain loses plasticity. You get stubborn and set in your ways. You get cronyist, right? Crony is a term that comes from a physical appearance and action of older people. A crone is a physical descriptor. So this, I don't like it. And I look at what's happening, that you have these, and some of them in their 60s, but mostly 70s and 80s, septa and octogenarians, basically horse trading with one another to try to maximize their stack and keep all you other people in the dark and feed them bullshit like mushrooms. And it makes me angry, right? Makes me angry because I don't believe I'm that. I don't believe just because I'm old, I have to be like that. And it's very frustrating. I mean, the kleptocracy that exists at the top of our political system and the rigging of the game for their benefit and against the average person, it's criminal. I mean, one, it's criminal, and two, it's just wrong. It's ethically and morally wrong. And so to be on the wrong side of ethics and morals, and yet to seem so righteous and sanctimonious in your tweets, it literally makes me retch. Yeah, this is the wrong number to talk about, though. So much of this is people like Ken Griffin getting richer. And, there's a massive business of scalping ETFs. And this didn't just start yesterday. This goes on every single day. There are firms like AQR and others. They have entire quant groups, and Millennium and a bunch of the big hedge funds, Renaissance, they do this all day. So there were a lot of people who were shorting Bitcoin and buying, the ETF, or shorting the ETFs and buying Bitcoin, or shorting BITO and buying, FBTC. And I mean, the amount of arbitrage that goes on, and part of it is because of the unique ways they trade, right? ETFs trade literally the last minute of the day. Right? They don't actually trade all day. They actually do their buying and selling the last minute of the day. And so there's a whole bunch of stuff that's going on. The other thing that people aren't paying attention to is, again, those flows have nothing to do with the money that came in. I actually did Scott Melker's show yesterday live during the open with Hunter.
Scalping ETFs involves capitalizing on the arbitrage opportunities that arise between shorting Bitcoin and trading exchange-traded funds, creating a unique space for astute investors. The intricacies of this approach hinge on the distinctive trading patterns exhibited by Bitcoin ETFs, providing a fertile ground for traders to navigate and profit. The exploitation of price differentials between related assets takes center stage. Investors engaging in scalping ETFs strategically leverage the fluctuating value of Bitcoin, either by shorting it or by trading ETFs. The juxtaposition of these actions creates a dynamic interplay that forms the foundation of potential gains. One key element fueling this strategy is the inherent volatility of Bitcoin, a characteristic that sets the stage for swift and significant price movements. As the cryptocurrency market experiences fluctuations, traders adept at recognizing patterns and seizing timely opportunities can exploit the variance between shorting Bitcoin and engaging in ETF transactions. In conclusion, scalping ETFs within the context of Bitcoin and traditional financial instruments offers a captivating venture for traders seeking to capitalize on arbitrage opportunities. By navigating the unique trading patterns of Bitcoin ETFs, investors can position themselves strategically to harness the potential gains arising from the dynamic interplay between shorting Bitcoin and engaging in ETF transactions.
I mean, Hunter's such a great guy, and we've been partners with them really since inception. And for him to be on the show with us live, at 9:30 when things started, and you hear this big thing in the background. All those guys are cheering, because it's 6:30 out in California. And Scott was like, "For the love of Satoshi, will you please go be with your people and celebrate?" And it was cool. But Hunter's amazing, so I'm super psyched. But look, they had a very simple strategy. We're going to be the lowest fee ETF, and so they had to revise their fees down. What's crazy? Here's some inside baseball. The original discussions about where people were going, and not like collusion and but what people were hearing was that BlackRock thought they were going to start around 80. And BlackRock's first salvo into the war was 30. So somebody thought better of it, and they got all the way down to 30. And then there were multiple revisions over the last couple of days, and BlackRock got, I think, down to 25, I think.